Hey traders! Today, we're diving into one of the most powerful bullish reversal signals in technical analysis, the hammer candlestick pattern. If you're spotting potential trend reversals, this is a must-know. The hammer is a single candlestick that forms at the bottom of a downtrend. It looks just like a hammer, a small real body at the top, little or no upper shadow, and a long lower shadow that's at least twice the length of the body. What does it mean? During the session, sellers pushed prices way down, but buyers fought back hard, closing near the open or higher. This shows rejection of lower prices and potential buying pressure taking control. There's also the inverted hammer, the upside-down version with a long upper shadow. It can signal the same bullish reversal, but it's often weaker and needs more confirmation. Don't confuse it with a dragonfly doji, which has almost no body at all. For best results, look for hammers after a clear downtrend, near support levels. Always wait for confirmation, like the next candle closing higher. Set your stop loss below the hammer's low. Remember, no pattern is 100%, combine it with volume, RSI, or other indicators. That's the hammer in a nutshell, a sign that bulls might be ready to take charge. Like and subscribe for more trading tips. What's your favorite reversal pattern? Comment below.